QuickBooks Pro Plus Desktop 2022 Pay Bills Form Check Form. Get ready because we bookkeeping pros are moving to the hilltop with QuickBooks Pro Desktop 2022. Here we are in our free sample file, Sample Rock Castle Construction, going through our setup process, typically being going to the View dropdown, selecting the Open Windows list, giving us our Open Windows options on the left. We have nothing open at this point. We're then going to go to the Company dropdown, Homepage, opening up that familiar homepage, going to maximize it to that gray area. Then we're going to open our major financial reports, balance sheet and income statement, going to the reports drop down, company and financial, on down to that balance sheet standard report. So there is our balance sheet, and then we're going to be opening up the income statement or profit and loss report, reports drop down, company and financial, looking at that P&L, that profit and loss standard report. I'm going to change the date on the profit and loss to January, so we got more information as we go through it. This is going to be the standard process I would set up when doing data input, thinking that every time I enter something into the QuickBooks system, I want to think about the impact on the financial statements and then further impact if there's any subledger that will be applicable that I want to go into further detail with. Going back to the home page in the Open Windows, in a prior presentation, we looked at the Enter Bills information, and that Enter Bills with regards to QuickBooks is more specifically meaning that we're entering a bill that we got from the vendor. The vendor means people that we purchase from. With QuickBooks terminology, it means we're purchasing something from a vendor, services or goods. Not only that, but they're goods that we purchased and we're entering in the system as a bill, meaning we're going to be increasing accounts payable as opposed to simply paying it at the point in time we enter it into the QuickBooks system, which in that case we would be using a check form, which could also be used for an electronic transfer, automatic decrease in the checking account. So now we're considering entering the bill situation. As we saw that when we enter the bill, that's going to be increasing the accounts payable. And it's going to be increasing or giving the detail by vendor. And then we're going to go to the pay bills. The pay bills will help us to sort the bills that we have entered on the left-hand side and then pay them as they become due. So realize that when you enter the bill, if you're paying the bill for like a utility bill or the telephone bill or something like that, that means that we're going to be increasing accounts payable, a liability, the other side going to the expense account at the time we entered it, not the time when we pay it. And that's on an accrual type of activity rather than a cash-based activity. And then when we pay the bill, we're going to be decreasing the checking account at that point. The other side decreasing the liability, not going to the expense account like telephone expense or utilities expense, but rather decreasing the liability that we had put in here. Now, this could be a useful process because, one, you might be entering bills that you have multiple bills and you want to sort the bills and pay them at a later point of time, sorting them in the QuickBooks system. Two, it's useful because the bills then will be entered closer to the point in time that you got the work was done for you. For example, closer to the time that you utilize, say, the phone bill or the electric bill and the actual utility of phone usage and electric usage, which is generally better bookkeeping to enter it when you first get it or when you actually get the service done for you. And three, it's going to help us then to sort by being able to sort the information, which may make it easier to pay because if we have our payment options set up and if we're printing checks, for example, we can choose multiple bills to then pay at the same time. So before we dive into this bill section here, let's take a quick look at what it will look like when we go to our reports. Go into the balance sheet. We see our report here on the, let's go down to the accounts payable. The accounts payable goes up with the bill. It's going to go down with the pay bill. If I double click on it, you'll see the activity in it. You can see the bills here increase in the accounts payable. And then we're going to pay off the bills. They label that a bill payment or check form. That's going to be decreasing the payable. Note that it's the same form as, in essence, a check, or you could think of the check form within QuickBooks as basically being a form that's going to be decreasing the checking account, whether you write a physical check or you're using like an electronic transfer. But they're going to label it as a bill payment type check dash check. And that's important to note because that gives you an added piece of information. That piece of information meaning that that check went to pay off a payable. And if you want to know what the expense account was with relation to it, you're going to have to find the actual related bill for it and then see what the expense account was related to it. So if I double click, for example, on this check, then it looks like a normal check form in this format here. It looks similar to the bill, but notice it's decreasing the checking account. We have a similar kind of layout up top, but then down below, it says the bills paid in this transaction are going to be down here, lists out the bills, as opposed to down here listing out the actual expense accounts that would be impacted if it were a check that was not paying off an accounts payable. So in other words, if I close this back out and I say I go back to the home page, and let's look at the check form down here. This would be a check form that would not be paying off an accounts payable, but just simply writing a check or representing a decrease to the checking account. This looks more like the bill type of data input, except that we don't have bill up top. We have the checking account. And then down below, you see these two tabs down below, which would be the expense tab for things like the telephone, utilities, and so on, and the items tabs if we were purchasing inventory. So this looks a lot like the bill, except this time we would be paying it at the point in time when we enter it into the system. The bill then means we're entering it into the system, and then we'll pay it at a later point in time. Closing this then back out. Now, we saw last time we can also sort that information. If I look at the balance sheet over here, this information with sub-reports that will break this stuff out by vendor. We can also see the bills that are going to be outstanding if I go back to the home page on the left-hand side in the open windows by going to the vendor center and determining, what we owe at some point in time. So then when we go to the pay bills tab, we can sort the bills that are going to be outstanding, which is quite useful. You could have your toggle up top. So we'll just go through some of these items. I'm going to close the tab to the left so we can concentrate here. So we got the item below, which is due on or before. Generally, the default is to show all tabs. These are going to be all of the bills that are going to be outstanding. If you're a small company and you don't use this feature that much, meaning you pay the bills as you enter it into the system, possibly paying it with just basically the bank feeds format as they actually clear the bank, then you may not be fully utilizing this and you won't see a lot of information because you're kind of more on a cash basis with regards to the accounts payable. But the larger the company is, the more likely you're going to be in a situation where you really want to sort out the payables so that you can pay them as they become due. This is one way that you could sort this information out. You could select then the bills that you want to pay on this side, and that'll line up all the bills, being able to pay them all at the same time. I'm going to uncheck those here. You also have your filtering options of the bills that have not yet been paid. These represent bills that have been entered that have not yet been paid. So we got the filtering options. You can have all vendors, or you can select a particular vendor, for example, looking at the bills related to a particular vendor, sorting in that way as well. I can't find one that owes money, but in any case, if I go back to all vendors, then you can also sort by these items. You could sort by the due date. You could sort by the discount date, the vendor, the amount due, the reference number, the discount used, the credit used, the amount to pay. So these are other ways that you could filter the information as you have a lot of information down below and are trying to pick the ones that you want to pay at this point in time. I'm going to go back to all here, and then I'll keep it at the due date. Then down below, you could select all of them. If you just are determining that you want to pay all of them at this point in time, you could select all right here, and that'll check them all off on the left-hand side. You can also go to the bill. So if I selected, for example, one bill, I believe you could double click on it. But if I want to see the bill that was input that's creating it, I can go to the go to bill, and there's the bill that was input to create that payment that we need to then pay. Closing this out by going to the X on the upper right. So there we have that. We've got we could set the discount. We can have the credits if there are credits that are available, and then we've got the payment options on down below. This will be the date. The date will typically default to the current day that you're in, because the way they set this practice problem up, it's 12/15/23. And so then we got the method of payment. If we're writing a check, then we can actually check off multiple of these items we want to pay. and we can use the checks that we could physically print out of the QuickBooks system if we choose to do that, meaning you actually still get checks from the bank that are going to have the check numbers and so on it that you'll put into your printer. They still need to be checks that are outside, not a blank piece of paper, due to the fact that you need that double check that they're checks from the bank, and then you got the check number on it that should line up to your check number. That's an internal control. And then you can print them out if you decide to do it that way, which is nice because then you can basically print them all out at the same time. Or if you're just basically writing manual checks, for example, then you can line up the check numbers that you're writing to the checks, and then you basically have a two-step system. They're not going to be checks generated from QuickBooks, but you could still use your checkbook and basically line up to what is in QuickBooks using your double check of controls there as well. Or you can say that you want to basically assign the check number down below, and then you've got your options up top. You also have the method of payment from a check to a credit card if you're paying with a credit card, or you got the bank payment. The bank payment could be useful. I'm going to say okay here. They changed the date for us. The bank payment might be useful because then we don't have to deal with the check number. So if you're doing an electronic transfer and you're just using this to track when you're going to pay it and you don't want to assign a check number or print it out, then possibly you can use the bank item here, or the bank payment, typically not having a check number, but you may then apply a check number. And so then when you select this item, it will then, this being a pay the bill section, which is in essence a check form or a form that's going to be decreased in the checking account, will decrease the checking account for all the items that have then been selected, and the other side is going to be decreasing the accounts payable. When you go back in to the information and drill down, as we'll see in a second, you will not get back to this screen, meaning if I go to the end result, say the forms like the balance sheet, and then use my drill down feature, my zoom in feature to the source document, you're not going to get back to this page because this page shows multiple bills that needs to get paid. It will go to the single, pay bill calculation or single pay bill form, which will look kind of like a check, except that bottom portion, as we saw, will look a little bit different. Now up top, you'll have the due date, the vendor, the reference number, the discount date, the amount due, discount used, if any, credits used, if any, and then the amount that you're going to pay, the total then on down below. So now I'm going to close this out. I'm not actually going to pay them here. I'm just going to close this out and say, no, I don't want to pay it. I just want to look at things. And we're going to then open up our report, go into the plus button on the left-hand side. Let's go back into the balance sheet. And what we'd expect to see on the balance sheet then, after we pay the bills, is in the accounts payable. If I double-click on the accounts payable, all these items that have the bill payment would then be the bill payment. The other side, and notice it says bill payment and then a check, because it is in essence a check meaning in this case a form that's going to be decreased in the checking account, which could include, say, transfers that are directly out of the bank. So we got the bill pay check. So there we have that. And if I double click on it, it's going to take me not to the data input form that we saw, but rather to basically a check type form. However, different from the check type form if I was to enter it outside of that bill pay, because that bottom portion does not show the expenses and the items, but rather it shows that bill, so that if I want to see the bill, which might show me the actual expense account, then I can go look for this particular bill and see what was actually purchased with it. So I'm going to close this back out. Now the other side, closing this back out, the other side is going to go into the checking account because it's decreasing the checking account, double clicking the checking account. Now the checking account is going to have the most activity. Notice the accounts payable goes up with the bill and then it goes down when you pay the bill. The checking account, because cash is kind of the blood of the business, right? It's kind of the flow of the business, facilitates the flow of transactions. It's going to have a lot more diverse amounts of items going through it than any other account. And what we're looking here is the bill payment. The bill payment represents, in essence, a check. Notice that bill payment, although it's similar to a check here, looks different because they're going to label it with that bill payment check as opposed to a normal check. If I double click on them, you could see the difference being down below where you got the bills checked off on the bill payment. versus a check format here, which just looks like a check where we assigned the expense account that is going to be expensed, and you got these expense and items down below, both of them coming out of the checking account. However, notice that this check that's not paying off a bill is recording a decrease to the checking account, the other side going to an expense account, meaning an income statement account. Whereas if I close this out and I go to this one, because it's a bill payment, it's still decreasing the checking account because it's in essence a check form or like a transfer form. In other words, a bank transfer or something decreased to the checking account, but the other side's paying off a bill, therefore decreasing the accounts payable. Closing this back out. You can also see this. Remember that the subledger is often something that you want to consider anytime you're dealing with like a bill type of form or a pay bill for the accounts payable, because the accounts payable represents people that we owe, vendors that we owe. Vendors means we owe something to, and therefore we can go to another report, which is a sub-report in the company and in the vendors and payables. And you could use one of these. I'm going to go to the vendor balance detail report again, and that'll give you your balance that is due. You can also go to a vendor balance detail. Let's do the vendor balance detail. And let's go to the vendor balance detail instead of the summary. And that'll show you by vendor. It'll show you the bill form and then the paying the check. And this one's really nice because you can see what's going to happen with a payable type of account by customer. And that means it's going to go up with a bill. Bill means accounts payable is going up. And then because you've entered like a utility bill or something like that, and then you pay off the bill and you can check it off. And you'll see this pattern, and you should be able to tie out that pattern. It's going to go up with a bill, and then it's going to go down when we pay the bill, and so on and so forth. If there's a balance due and outstanding, that means there's some combination of bills that have increased that we have not yet paid off in full, and that's what's going to be due. And then you could basically go through your pay bills section to determine how much of that you want to basically pay off. Now I'm going to go back to the home page and the open windows. One more thing just to note: when you're paying these off, you could pay a part of the bill. So if I went into the bill pay again and say I wanted to pay this particular bill, but I don't want to pay the full balance, then you could say, okay, I'm only going to pay like 500 of the 1,800 off. So it's possible that you can, do a partial payment on the bill. So keep that in mind as well. Closing this back out, and I'm going to say no, don't record that, and I'm going back into the home page. So that in essence are the major components if you're not dealing with inventory: entering the bill, paying the bill with regards to vendors. But remember, this writing of the check is also something that you could basically put up here in the vendor section, because that's another common way that you would pay vendors, even though it's in the banking section, meaning you just pay them directly out of the checking account, either with a check or you do a transfer, which in essence uses basically the same form, decreasing the checking account.